Okay, hi there, Jeff back again with another in our series of key diagram videos. We're focusing on micro at the moment, and here's one really interesting diagram where you can show 4 different business objectives in one diagram. So the objectives that a business pursues, the aims of a business, impacts on the prices they charge for consumers in one or more markets. Now typically, the aim of profit maximization, which is where marginal cost equals marginal revenue, that leads to higher prices than if a firm was to aim to achieve maximum revenue, which is where marginal revenue is 0, or goes for growth max, sales maximization, where they make normal profit, where average revenue equals average cost. And we'll also talk about profit satisficing on this diagram. There is no unique profit satisficing price and output. So here's a great diagram where you can show all 4 different objectives in one. Varying objectives have different implications for economic welfare. In particular, consider, for example, how consumer surplus will change as a firm's pricing strategies evolve over time. So profit maximization is where marginal cost meets marginal revenue. That's at output Q1. And we draw up to the demand curve to find the profit maximizing price, P1. I'm sure you could develop this diagram to show the total profit the firm makes. Revenue maximization is where marginal revenue is 0, where MR cuts the x-axis. That's at output Q2. And that involves a lower price, P2. A higher revenue, but a lower total profit in the end. A possible profit satisficing price, well, this is a price where the firm is making some profit, but not necessarily maximum profit. Perhaps a minimum profit that the shareholders expect, a minimum rate of return on capital. So a possible profit satisficing price is P3, output Q3. And sales max is, we keep moving down the demand curve. That's where average revenue meets average cost at an output of Q4 and a lower price of P4. Take a moment, take a screenshot if you want. Those are 4 different business objectives all on one diagram. Now, typically, you might be asked to discuss and evaluate these objectives in a question, an essay question, but also you often get these on multiple choice questions, particularly the consequences of moving from one objective, such as profit maximization, for example, to revenue maximization. What are the consequences for profit and consumer welfare? Now, these diagrams assume a single price firm, but of course, in reality, most businesses engage in one or more forms of price discrimination. They're multi-product businesses with a range of products, range of goods and services, operating across a range of markets. And they sell products at different prices to different groups of consumers. They segment the market. So please do revise price discrimination for your economics exams. There we go. 4 business objectives in one diagram. Stay healthy, stay positive, stay happy. See you again sometime soon.